Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of CleanSpark, ticker symbol CLSK, which had another massive week, following the previous week going up more than 68%. This past week, we went up over 28%, closing the week at a price of 17.86, hitting a high on the week of $19.23. Does look like it might have put in a little bit of a topping tail, so quite possible we could be seeing a turnaround over the next week or two, so good to be cautious of that. But I will be exploring the daily candles to give us some insight into the more short-term price action. And before I do that, though, I do want to throw up the drawings here because something really, really cool happened over the course of the week. In last week's video, I did highlight the 1618 extension from this retracement here. That was at a price of $17.98. And so over the course of the past week, not only did we hit that level, we went past it, but then closed just below it at 1786. So, I do think that could be a little bit concerning that we weren't able to close above this level. However, it is a pretty big extension. So, maybe it's, not that significant. But I do think that it is something to be paying attention to over the course of the week because I do think price could be settling out before potentially coming back to test this orange line at 1356, testing that as support before a continuation higher. But to look into that, I am going to switch over to the daily time frame so we can look at the nitty-gritty over here. And so basically what I see is that between Tuesday and Wednesday, we did form this gap here with the high on Tuesday being at this blue line at $16.39. So I do think that we should be filling in that level to, suggest that there could be continuation higher. But really, a more proper fill of that gap would be based on the close of the 13th, which was at a price of $15.89. So I do think that there might be a pullback to right around $16 before a potential move higher. But one thing that does stand out as concerning regarding the past few days and that we may be at a top is that if we do look at price going higher, we actually see volume decreasing. So that could suggest that, there are fewer buyers up here and we could be seeing a pullback. Also with that, it does look like we did put in this wick high on Wednesday, the 14th, at a price of $18.87, while we were able to hit higher than that on the 15th, hitting a price of $19.23. We were not able to close higher than that, not even close higher than Wednesday's close, which was at a price of $17.85. So we were barely able to close above that on Friday, closing the week out at that level. But we did get, some wicks down. That does suggest buyers have been stepping in. But really, I do feel like there are a lot of things kind of pulling the price down. Not only is it this gap here, but also, this gap coming down to $10.54. I do think that, could be pulling price down, but really I do think that 1356 will likely hold as support. And like I had gone over in last week's video, if this is to be an inverse head and shoulders pattern and that is to play out, I do think that price will need to come back to this orange line to test that neckline as support, confirming the breakout before continuation higher. And with that being said, I do think that 1054 could be left behind. But then there is one other thing that does stand out to me as being a pretty good sign. I had pointed out that there was potential for there being bearish divergence with the RSI, but since RSI did break higher and actually hit a high of 83.18, that is higher than the peak here at 79.56. So we no longer see bearish divergence. And that could suggest that we might be seeing another rally. While I don't think price will be going up to the 2618 extension at $25, I do think we need to see a pullback before that happens. I do think that there is one thing that we could do to get kind of an idea of where price might be going. And so that is going to be another Fibonacci retracement, but going from here, the low of $6.41, coming up to the high here at 1923. And yeah, so looking at this, it does look like a retracement from that high to the 236 would be almost perfectly, filling that gap, a proper fill to the close here. That will be coming to a price of $16.20. It does look like that, has kind of, very casually acted as support though. So if we do see, we could potentially see moves higher, bouncing off that approximate level next week. But if that is not able to hold, if 1620 is not able to hold, I do think that we could see price returning to 1433, which is a 382 retracement. But really with that, I do think we would be testing the neckline at 1356, potentially wicking down to the 50% retracement at a price of $12.82, really being right around that psychological level of $13. But, from my understanding of Fibonacci retracements, the 618 is pretty commonly retraced to. And so that would be coming to a price of $11.31, potentially coinciding with this gap here. So, something to consider with that. But I do feel like there has just been so much strength in the stock recently. I am skeptical, I am doubtful that price would be returning to this third gap to the downside at a price of $9.34, coinciding with the 786 here, and I believe the 236, but there are just so many, overlapping levels there. I guess I could just go off the high here from January 29th, and that is at $9.24. Price could be coming down there, but I do feel like worst case scenario, it would be coming down to $11.31, but realistically, I think it'll be coming back to 1356, testing that as confirmation before a continuation to the upside to tackle the 2618 at a price of $25.13. But, those are just my thoughts. If you found them helpful, make sure you like the video and share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching.